Hey guys, this is Victor with Alarme CPA. It's great to see you again. So 2021, guys, is behind us. Let's celebrate the year that we just closed. Let's celebrate the victories, and let's also learn from the lessons in the environment in which we lived in, as well as our businesses. So 2022 is here. And one of the topics that are being discussed and being thrown out around so much is inflation, guys. And today we're going to be talking about 4 different types of assets that you can look into in order for you to beat inflation. But before we talk about these 4 different assets, let's talk about what inflation is. So inflation is nothing more and nothing less than an increase in prices for goods and services. That's what it is, an increase in the prices of goods and services. And you might be saying, so Victor, why are the prices increasing? Okay, well, typically the answer is, guys, that the prices would typically increase because of demand and supply, as well as an increase in the monetary supply that is in the economy. And as you know that, in the last 2 years or so, the Fed policies put so much money into the systems, into the economy, that made people richer than they were a couple of years ago. That's number 1. Then number 2, as people have more money available to be spent, people went into the economy and actually spent the money, right? So the demand for the goods and services actually increased and exceeded the supply. Thus, you have increase in prices and for goods and services. Thus, you have inflation, right? That means that the money that you have now in your pocket or in your bank account or in your investments could potentially lose value due to inflation, meaning that in the future, now and in the future, things are going to be more expensive. So today we're going to be talking about 4 different ways, guys, that you can invest so you can beat inflation. So before we talk about the assets that I would like you to explore, inflation is right here, guys. So, car prices are higher than 2 years ago. Real estate prices are higher than a couple of years ago, as well as rent expense is actually higher than a couple of years ago, right? So that tells you guys, and in the most markets, actually, the increase of prices in both real estate, rent expense, real estate values, car prices are in double digits, right? So definitely inflation is here, guys. So now we're gonna be talking about 4 different types of assets, guys, that you can look into, that you can consider in order for you to beat inflation. Okay, so asset number 1, owning a business or owning an interest in a business. And I would like you to consider the following, right? So let's say that you own a business and you understand the market in which you operate in, you understand your customers and your clients, and you have a adding value, right? So if you understand the marketplace in which you're operating and you're satisfying the needs of your customers and your clients, you're actually creating value. And when this happens, guys, and you can do this for a sustainable period of time, right? Like time is a great asset to you because you are dominating these other aspects. Then you have pricing power. You can command a higher fee for the services that you're providing to your customers, your clients, or the goods that you're selling. Thus, if you have pricing power, you can command the price of your services and goods. That means that you can actually challenge inflation and get ahead. So I want you to listen to this clip here that we have from Warren Buffett, where he actually talks about one of the best ways for you to invest.
The best investment, passive investment, I think is a good business. If you own an interest in a good business, you're very likely to maintain purchasing power no matter what happens to the currency.
So as you saw, we couldn't agree anymore with Warren Buffett is saying, right? Owning a business is actually, guys, one of the best ways for you to increase your wealth, increase value. And at the same time here, it's a great way of an asset class to beat inflation. Asset number 2, guys, gold. So gold has often been considered a hedge against inflation. In fact, people often view gold as an alternative currency, and gold is a real physical asset and tends to hold its value across the time. I want you to see, guys, the comments that Ray Dalio has made on gold. See here.
Gold is very much gold is a currency. Throughout the history, I won't go on, let's say, on length, but money was like a check in a checkbook, and what you would do is you get your gold, and gold was a medium. So gold is one of the currencies. So we have dollars, we have euros, we have yen, and we have gold. And if you get into a situation where there's an alternative, and in this world where we're looking at what are the alternatives, and the best alternative becomes clearly one thing, something like gold, there becomes a risk of that. Now, it doesn't have a capacity. The capacity of moving money into gold in a large number is extremely limited. So the players in the world that I have contact with who move that money really don't view gold as an effective alternative. But it could be a barometer, and it is an alternative for smaller amounts of money. And
do you own gold?
Oh yeah, I do. I think anybody. Let's be clear that I think anybody who doesn't have any, there's no sensible reason not to have some. If you're going to own a currency, if you don't, it's not sensible not to own gold. Now it depends on the amount of gold, but if you don't own, I don't know, 10% if you don't have that, and then depends on the world, then there's no sensible reason other than you don't know history and you don't know the economics of it. But cash. So cash, it's an alternative. View it in terms of an alternative form of cash, and also view it as a hedge against what the other parts of your portfolio are, because there's traditional financial assets, and so in that context, as a diversifier, as a source of that, there should be a piece of that in gold, is all I'm saying.
Okay.
Interesting, right? Now see his other comments on gold.
And the issue is you can't jump into cash. Cash is trash, okay?
Now, guys, if you're interested in learning more about how to buy physical gold through the stock market, look at the symbol GLD. So do your own research, read about it, understand the risks associated to it, and make a decision. Asset number 3, guys, commodities investments. So commodities, guys, like utilities and oil, have a unique relationship with inflation to come. As the price of a commodity rises, so does the price for the product that the commodity is used to produce. So think about it, guys. So let's say that you have a car. Let's keep it very simple, right? Let's keep it very simple. You basically utilize your car to go to and from work, go to the gym, go to the mall, take the kids to, practice, take the kids to school, and all these errands that you typically have to do. So you need a car, right? And if you do not need a car, you need a transportation, service, like call it a Lyft or an Uber, a driver, etc., right? And unless these cars are electric, these cars need gasoline, right? So in order for you to function in your car, you need gasoline in the car. And you basically need to move around regardless of the price of the gasoline. So if the prices goes up, you still need to get around. So that's the price for gasoline. Now, consider utility at home. So like gas or like power, same deal. You need to wash your clothes, you need to heat your car, or not heat your car, but heat your home, and you need to basically electrify, you need to power your house, right? So if the prices of the utilities do go up, you still have to power and electrify your house, and you still need to heat your house. So these are ways in which you can see that inflation creeps into your home, right? As the prices for the services that you need do go up. So if you understand that in the average home, most people, everybody use utilities, right? Like power and gas, as well as gasoline for the cars, then you can consider buying into investments that sell commodities. Why? Because these companies need to basically beat inflation in order for them to keep in business, right? So you can look into companies like Exxon, right? XEOM. And these are companies like as Exxon that this year are poised to keep increasing in value due to inflation, as well as these companies pay a very nice dividend every quarter. So consider investing in companies that are in the commodity business that are very stable and have a long track record of paying dividends and are very stable and are safe and sound companies. And by you considering investing into these companies, you can hedge your assets and at the same time make money through dividends. Number 4, guys, rental income. So real estate income is income earned from renting out a property. We've talked about these guys before. Real estate works well with inflation. This is because as inflation rises, so does the property value. Okay, so if the prices do go up, the value of the real estate asset goes up at the same time. So picture this. If the value of the real estate goes up, the landlord can also increase the rent amount that it collects on a monthly basis, okay? So you have a trifecta. Number 1, the value of the real estate goes up. Number 2, the rental income that you collect on a monthly basis can go up at the same time. And then on a third point is, if you aggregate, right? Because you don't collect rent only 1 month, you collect rent each month for years. So then the future value of your rental income goes up, okay? So that's why real estate is also a great hedge against inflation. It gives you the cash flows, it gives you the value, and it gives you the future cash flows or the future value of the business. Take a look at what Grant Cardone says about commercial apartment rental.
Apartments produce positive cash flow, or at least they should if you bought it right, if you got the right debt on it, and if you picked the right property. Apartments produce positive cash flow, which is the holy grail of finance, a concept that very few people ever get right, almost as importantly as inflation. Same thing with cash flow. You're underestimating the value of positive cash flow when you pick a property. It is cash flow that gives it value going forward because 1, you get to keep it long term, and 2, it gives you security when you go to sleep at night.
I couldn't agree anymore. So at the same time, guys, investing in real estate can also involve management. You have to buy the property, you have to find the property, you have to manage it. It's highly intensive sometimes for the ones that have very little experience. However, there's ways for you to invest in real estate without having to buy or manage real estate. For that, look into REITs for you to invest into real estate without having to actually manage a real estate. So there you go, guys. I've given you 4 different types of assets that you can consider for you to beat inflation. Number 1, owning a business. Number 2, gold. Number 3, commodities. And number 4, real estate. And as always, guys, use this information for you to make a decision. Investing is not to be taken lightly. Take the information, read, and make an informed decision. And as always, guys, click like and subscribe, and I'll see you in the next video.